Africa's diamond sector regains its sparkle. After a tough year, African diamond industry is finally looking to the future with optimism again. In 2019, restrictions brought about by the COVID-19 pandemic decimated consumer markets and paralyzed supply chains and led to the closure of mines. Companies were forced to slash investment and weigh up mass retrenchments. But now a year of supply restrictions has reversed a market glut, and diamond companies are spearheading the vaccine drive in mining communities. Diamond prices crashed 15 to 20% in April 2020 as travel restrictions and lockdowns bore down, while some African mines from Lesotho to Zimbabwe remained operational. Others shut at the height of national lockdown to fend off pressure on fragile healthcare systems. The consumer market was similarly hit. Diamond retailers, including Tiffany's and De Beers, closed boutiques in Hong Kong, London, and New York, while border restrictions halted gem shows. In mid-January, prices had tanked in China, the world's second largest consumer of polished diamonds, and its East Asian neighbors temporarily closed around 75% of jewelry stores, global diamond analyst Paul Zimnisky notes. This paragraph taken on November 3, 2016 shows as the coronavirus spreads from China, diamond trading and related activity was halted in the industry's important regional trade hubs. The world center of diamond cutting and polishing, Surat in India, was shut down when the city closed its factories in March, causing stockpiles to grow. As a result, India's rough imports fell from $1.5 billion in February to $1 million in April, according to data from the Gem and Jewelry Export Promotion Council. In Africa, which accounts for up to 50% of world supply and is home to major producers such as Botswana, Democratic Republic of Congo, and Angola, the industry was devastated. In Botswana, the biggest African earner from its diamond production, 8 months of border closure shut out the site holders who flock from around the world 10 times a year to inspect De Beers' latest haul in Gaborone. The economy contracted by 9.6% in 2020, according to the IMF. In Guinea, whose Banankoro Sefado region in the east is laced with rich deposits of precious stones, diamond exports dropped from 270,000 carats in Q1 of 2019 to a paltry 39,000 carats in Q1 of 2020, according to the National Bureau of Expertise (BNE), which oversees the country's export. But now, the global diamond industry is not only regaining its sparkle, it has bounced back stronger than before the pandemic, Zimnisky says. Now you are seeing demand return and diamond prices are higher than they were before the pandemic. That translates to more revenues for countries with exposure to diamonds like Botswana. The comeback began as Indian cutters and publishers reopened last year, kick-starting the global supply chain and nursing a recovery in the second half of 2020. Diamond-producing economies are braced for a rebound. Botswana's economy is predicted to grow by 7.7% this year after the country reopened its borders in December. Paradoxically, the pandemic's suspension of mining operations has wiped out a diamond supply glut that has amassed over the last decade, making the global diamond industry glitter brighter than ever. After peaking in 2017, rough diamond production had declined by about 5% per year, yet 2020 saw a 20% decrease compared with the previous year. Data collected by business consultancy Brain and Company finds. Now, we are starting to see supply shortages. We started to see that before the pandemic accelerated that problem. The oversupplied market was the biggest problem for the industry over the last decade, says Zimnisky. As economies rebound under the impact of vaccines and stores reopen, a recovering consumer economy has unleashed pent-up demand. This is probably the most enthusiastic I've seen in this industry in quite some time. The sentiment is quite strong, concludes Zimnisky. African agricultural sector continues to draw high interest from investors. The trade and investment landscape in Africa has continued to draw interest from lenders, particularly in West Africa, with notable changes in origination strategies. In Q1 of 2021, Orbit reported a 26% increase in the number of unique inquiries from lenders originating funding opportunities when compared with the same period in 2020. Some lenders have seemingly decided to focus more on particular regions and in some cases individual countries, citing due diligence processes disrupted due to travel restrictions as a main reason and risk mitigation strategies as the second most common reason. These have prompted lenders to focus on regions and or countries where they have representative offices or a deep and reliable network. Agriculture remains the sector with the most interest, present in almost 70% of investor mandates. Financial services and manufacturing, including FMCG, are also quite prominent, being flagged as sectors of interest in 64% and 44% of investor mandates respectively. 231 unique lender inquiries were recorded in Q1 of 2021. Of these, 58% of the companies are either headquartered in West Africa or have their main operations in West Africa. 17% are based in East Africa and 16% are based in Southern Africa. Only 5% of these companies have cross-regional operations compared to 14% recorded in Q1 of 2020 pre-pandemic. A considerable portion of the lenders' inquiries included a working capital component in the proposed transaction structure, 35%. Supply chain finance and asset financing components were also notably present in discussions, 34 and 30% respectively. This quarter, the average ticket size was recorded at $12 million, an increase from the $10 million average recorded in the same time period in 2020. 20% of the companies receiving inquiries from lenders reported annual revenues between $100 million and $250 million.